so what we want to have and make sure is that the two EMAs have some distance between them. We don't want them really tight, close together. So that's happening here. And the ideal is we've got some movement, we've got some, that sine wave up, down, we can see that. And we see price pulls back into the 50 and then bounces off the 50 with coinciding with a cross of the MACDs. And this is a two-line MACD, and I've included this in the email that I've sent everyone. So, and you can get this in the download section on the blog as well, if you're not a member, quote unquote, and haven't signed up for my mailing list. So if you don't have this two-line MACD, you've got it in your email. Okay, so we've got this cross below the yellow zero line here. Okay, mark that off. And we've got to bounce off the 50. And up we go. Okay, and we put our stop. Grab this trend line here. And we put our stop below this swing low here. And as far as targets, that'll vary. Each guy's going to be a little different. You want 10 pips a trade. You want 1-to-1 risk-reward ratio here. So if we're getting in at, let's say, 10, and our stops, what's that? 1, let's call it 10. So 10 for 10, right? So you get your 10 pips there. There's probably about 15 available, and so that's trade number 1 we would have taken. And again, another setup shortly after that. Comes down into the 50, bounces off, we get a cross. Like, these two things have to happen at the same time. Okay, so we've got it comes into the 50, great, and we look to the MACD. Is it below the zero line?